Chainlink daily update. In this video, we're going to be focusing on primarily bullish and bearish patterns. And, depending on your bias, if you have one, which is generally not recommended, for any kind of TA, you want to be looking at both sides. But this chart in front of you with the red and green, bulls and bears, it's a perfect case in point on Chainlink that, fitting, the chart to your narrative can be dangerous, and you can often overlook a pattern right in front of you that's the exact opposite of your bias. So this is it. So this is just to simply help you out and realize that just because you see one pattern doesn't mean there's not another one right on top of it. So looking at this, right, our fall down from April, the green is obviously more bullish, and we'll invert the charts and you'll see. If you don't see them yet, right, you'll see the difference. So the bullish would be this kind of descending part here, right, the descending wedge, right, and you can invert this and you can see this rising wedge, right, that often breaks down, right. For the bullish, right, you see the flagpole. Most people often, see bullish patterns better than they see bearish patterns, for the simple fact that most people are here in a bull market and not here in a bear market. So if you're watching this, you're already one step ahead, right? Because you're still trying to stick out the storm, and you will be greatly ahead of the rest of the crowd when they show up, whenever that may be. But so looking at this, right, rising wedges often break to the downside, but since this is an inverted chart, right, the price is increasing, right? And then you see the same thing happen, right? The ascending wedge triangle, the ascending triangle here, the flat top, right? You see the test point of the wick, and this often breaks this way, right, to the upside, but inverted, right? This is why they're color coded, so you don't confuse yourself, right? This is where we are now. So we have a test point. Now note also, the red, the bear, is drawn from the wicks. The bull, the green, is drawn from the candle bodies, as you can see. So people that draw from one, if you're one of those people that only does one or the other, I invite you to change that and look at both sides, because these are two very different patterns and two very different outcomes, right? So if you're only listening to bearish news, you're probably going to find this scenario in the red. If you're only listening to bullish news, bullish people, you're probably going to see the green, right? You need to look at both and then look for the invalidation or the validation of said pattern. So this is what we're looking for. We're looking for a break for the bears below these wicks, right? If that happens, we're going down, right? Submarine City, Chainlink, beware. That could be our final. If we get another push down, right, be aware that don't get too greedy and start, at least dollar cost averaging is a great way to, not have to guess the bottom too closely, because if you're trying to guess the bottom and time the bottom, there's not been a whole lot of successful people do that in world history on any market. So so we're looking for a break of 530 on the wicks on that, right, that lower line, right in that area. So watch for that on the daily chart. On the other side, right, we're looking to break above, kind of break out of this this line here, which is, we're very close today to doing it. But that doesn't mean that, if price closes outside of that green line today, we're good to go, right? That just starting to improve the odds. You'd really like to, take out your high here, make a higher high, and that you want for confirmation. You don't want to look for one candle and then, forget about it, right? You want to look for a breakout, a confirmation of that move, which is be another candle, another session, right? And then you just increase your odds of going up. There's nothing guaranteed in crypto. No certainties but uncertainty. All you have are the odds to play it, and that's why you study TA, learn TA. You want to increase your odds of that move, whatever's in front of you, of playing out. So that is the point of this video. Hopefully it helps you, now, use it in the future, use it, share it with a buddy. All right, let's get to the quote of the day. Short and sweet. History is a vast early warning system. Fantastic quote. Learn from history or you're destined to repeat it. Car of the day, Lamborghini Aventador Roadster SVJ. You can see the SVJ on the back. Lamborghini's flagship, in my opinion, and not up for debate. This is the best color that they make. Maybe yellow. I would go with yellow, but pretty color. Chartreuse. All right. That's it. Forex Factory. Go check that out. It's free, 100% free. You don't have to know who you are. It will help you. It talks all about the US dollar, the DXY. If you're interested in the DXY, the US dollar, and you should be, right? Because that affects all markets. You need to go check that out, forexfactory.com. Then you click on the calendar, and that's when you get this, and it'll tell you all the news coming out per the day. So the red folders are the important key events. So we have a couple tomorrow, right? Friday, July 15th. All these times are in Eastern time for the New York Stock Exchange time. Okay, so 8:30 a.m. tomorrow, we could see some volatility if we get these numbers skewed a little bit, right? This is the forecast. If they're greatly different, like, look at last month, right? See, now we're predicting way higher, right? We were negative. Now we're predicting way different. So if this becomes like, negative, it's way off, then we should have a little bit of a jumpy jump session. Okay, so we have 3. It's rare to have 3. Usually, 1 is even crazy. Red is important, of key importance. If we have 3 red days, the potential for volatility greatly increases. So, buckle up. Maybe we'll see something tomorrow. And then, I talked about this in my last video. Everything is in play. Talk about the possibility of raising interest rates 100 basis points, which, if you don't follow that, you don't know, that means 1 percentage point, which would be rare. Usually it's raised 0.25%, 0.5%, but 1% and one's just overnight would be rare. But when you see things like everything is in play, be ready. That would definitely sway some markets. So we will see how that goes. And that's tomorrow. So wake up or go to sleep, depending on where you are in the world. Good afternoon, good evening, and good night. And I will see you on the next video. We'll be right back here tomorrow.